Hey, it's Mike over at Cross Country Mortgage. It's Monday morning. It's time for your Monday morning mortgage update for the week of February the 10th. Hope you had a great weekend. I always give you some insight on what's happening in the market for the coming week. Try to show you the stuff that's going to help you make better decisions on buying and selling real estate, or if you're advising somebody who's buying and selling real estate, what's going to affect the market so you can make those better choices. So we always try to talk about what happened. We do talk about what happened the week before and what's going to happen this week. So last week, really nothing. The rates ended Friday with the same way they started Monday, but there was a ton of volatility in between. And let's look at the charts. This is a graph that shows you charts that shows you the trading of mortgage-backed securities in the bond market. Money is put in one or two places: the riskier stock market or the safer bond market. Mortgage rates are determined by the trading in that bond market. So when money flows into the bond market, mortgage rates get better, and we see an upward movement, green upward movement in this chart. When money flows out of the bond market, mortgage rates go up and get worse, and we see a downward movement in this chart. So this is a year and a half history here. On the far right hand side, you can see this is today. You can see that little window at the bottom. This is a live feed. And what we have seen just since January 13th, really, when the rates were over 7.5%, now we're seeing rates in the low sevens, high sixes, just depending on the program. I don't know if you knew this, there's over 30 different factors that impact a mortgage rate a borrower can get. 30 different reasons. That's why it's so hard to just quote rates online, because there's so many things that can impact the interest rate a borrower can get. But what you can see on this graph is that back in October of 2023, when rates were over 8.5%, we were quoting that on a 30-year fixed. Now it's much better. So even though we see this volatility, and yes, rates are higher than they've been, they're still much, much better than they were, and we're trending in a very good place. Rates don't change overnight. It takes time. It took time for them to get this high, and it's going to take time for them to get lower again. And it's coming. We just don't know exactly when. So let's talk about what's going to impact the market this week and what impacted the market last week. Why did we see these rates flatten out? Well, we saw some manufacturing news was positive, means businesses are making stuff, but probably the biggest thing is the tariffs. It caused uncertainty. And when bond traders or investors are uncertain about the future, they park their money in the safer bond market. Now, the tariffs were a much to do about nothing, because Canada and Mexico basically did what Trump threatened or asked them to do, and he put a pause on those tariffs for 30 days. The China thing is still working itself out. So what's going to impact rates this week? Number one is inflation. Number two is the Fed speaks. Number three is retail sales. And number four is the Federal Reserve's or the Treasury Department selling debt. So inflation, we got two big reports coming out this week, comes out every month: CPI and PPI, what consumers are paying stuff, what producers are paying for stuff. If those reports meet expectations or are lower, meaning lower inflation, we'll see rates get better, because inflation is the number one death of mortgage rates. When inflation goes up, rates go up. Second thing is the Fed speaks. So Jerome Powell, our Federal Reserve Chairman, is giving his semi-annual committee reports. He's going to be on the Capitol Hill, and all the senators and congressmen are going to be grilling him and asking him a bunch of questions. And what he says, how he responds to those questions, it could absolutely impact the market about the future of our economy. Remember, the Federal Reserve sets economic policy. The Treasury Department pays bills. So the next thing is retail sales. Big retail sales report coming out. It's the January report. So we all know that retail sales in November, December are good, because that's when most businesses make their money. So what's January going to look like? We expect this report to be low, and a lower retail sales means a weaker economy, and that means mortgage rates should get better. When we see a weaker economy, money flows into that safer bond market, and we see mortgage rates improve. The Federal Reserve is selling debt. They do it every month. They sell notes and treasuries. Much debt. They have to sell debt so they can pay their bills, right? So we can pay, our government can pay our bills, our tax dollars, et cetera, et cetera, et cetera. So they're selling a lot of debt. The market has to pick up that debt. But a big thing that's really impacting the perception of what's happening is Doge, right? The Elon Musk thing, he goes into these different departments, he looks at their books and says, hey, are you guys wasting money? Are you spending my money, our money, tax dollar money efficiently? And an interesting report came out this weekend that the Treasury Department, now administrators within their Treasury Department have said that they don't even question bills. They've been told, don't question what you pay, just push a button, write a check, however they do it, and pay the bills. Over $1 trillion, $1 trillion in the last year is set on automatic payment. That means they don't question it. It just goes out. Nobody looks at it. Automatic payment. Now, Gail and I were going through our bills a couple months ago, and we were thinking, we were looking at our budget and saying, hey, what is this? What is this? And we found out that we had some subscriptions that were just automatically being paid. We had signed up for maybe 6 months ago. We forgot about it. You guys all have that, right? And so we cut these subscriptions, but they were just automatically being paid. We're not paying $1 trillion in this stuff. And this is a ton of money. And hopefully this will all get resolved so that our money is being spent wisely. But what comes out this week, it seems like every week, more waste is coming out. This absolutely could impact rates. It could impact where investors move their money. Are they going to stick it more in that bond market, which could improve mortgage rates this week? So we're starting the week floating, and going to pay attention to those inflationary numbers and what Jerome Powell says and what retail sales show us. And if you know anybody who can benefit from this video, please forward it to them. If you need any input or advice, I do these videos once a week, but I'm also a mortgage broker and a banker, and I'd love to help you with your mortgage financing. So let me know if there's anything I can do to help. If you have clients that are running into some bad advice, or maybe they just need a second opinion, I'm more than happy to help. Forward to somebody who can benefit from it. Have a productive week, and we'll talk to you next week. Bye-bye.